Kranti Bathini is Director of Equity Strategy at WealthMills Securities, joining us with his take on the markets. Kranti, it's good to have you on the show. Thank you very much for your time. What are you buying in India? Where is their value, given the run that the markets have seen and the fact that everybody's saying the Indian market is looking expensive?
Yeah, Tanvir, good morning. Always a pleasure to share my views with you all viewers. And Indian market is looking quite interesting. The economy has posted a 7.8% growth in the previous quarter. But there are ample opportunities in the banking and financial services, HDFC Bank, where the valuations are compelling with a long-term basis. So, and conglomerates like Reliance Industries also offers value for the investors in a medium to long-term basis. And also we have the IT majors like Infosys. These are the stocks we are currently looking in. And also Tanvir, defense is emerging as an interesting theme in India. There are ample opportunities that are throwing for the investors at this point of time in the defense space. Defense is emerging as a new sector in India. So these are the places offering good value buy for the investors in a medium to longer term basis.
How are you looking at playing the Indian consumer?
Yeah, there are opportunities in the Indian consumer space. Even there are the companies like Colgate-Palmolive. They have come up with a guidance with respect to the opportunities that are lying in Indian markets. So Indian market is looking both FMCG consumer offers when the economy is growing at a faster pace at around 7.8%. There are ample opportunities for the investors to cherry pick the stocks for a medium to long-term basis.
I also want to get a sense from you on, obviously next week is the G20 summit, but I was speaking to the management of Indian hotels and getting a sense of how the Indian hospitality sector is faring in the wake of all these big events happening in India right now. Also coming on the back of the pandemic with revenge demand taking shape. What's your own sense on hotels, hospitality as a sector to invest in India?
Yeah, Tanvir, you're absolutely correct. What we can see is a lot of buoyancy and the sector looking robust in a medium to short term. But the valuations are already priced into the growth. But the next coming 2 quarters, earnings are very crucial for these companies. Indian hotels have been posting, and in fact, the stock has multiplied from the post-pandemic, and most of the hotel stocks have been rallying in the recent fortnight as the G20 offers robust demand for the companies which are, for the properties which are located in the NCR region. But also, as you mentioned, we can see the pent-up demand has been going up in India, and also the corporate travel has came back to the normalcy. People are preferring to travel now, having meetings in person right now. So that has been creating more robust demand for the hospitality and hotel sector is concerned in India. So there are opportunities. Indian hotels remains one of our key favorite in the hotel sector is concerned.
What about Tata Steel? I was talking to, again, Mr. T.V. Narendran about the prospects of the steel business in India for an integrated steel player like Tata Steel in the wake of China's slowdown. How much conviction is there about the steel business in India, the commodity business in India, and allied businesses and stocks related to the same?
So we're coming to the commodities, as you're aware, it's cyclical in nature. But coming back to India, when the economy is growing at 7.8% and the government emphasis is on infrastructure going ahead, and also different construction sector, and also defense is taking a heightened activity in India, definitely stocks like Tata Steel is going to take the benefit. But for the alternative for the investors looking for investing in India, definitely these are the ideas investors can definitely looking for a longer term basis.
Indeed. And finally, Kranti, what's a big risk of investing in India right now at these levels?
The risk, if a longer term perspective, the risk is very normalized. The geopolitical events can jeopardize any type of the current ongoing party in the markets. So I don't think so. There are major risks are associated in India, but we need to see the monsoon and also the earnings expansion of the companies. These are the crucial things one need to watch out in India. But on a longer term basis, Tanvir, India offers a best opportunity. I want to state this interesting quote right now. The China markets are too cheap to short, but are right now it is too large to ignore and also too risky to invest. But the best alternative for the global investors seems to be India.
Okay, fair enough, Kranti. Thank you very much for joining us and giving us your perspective.